This is our top 5 gainers and top 5 losers analysis for April to 2019. That's Tuesday. I am your technical analyst, JC De Guzman. Today, I'll be talking about PHA, Green, Holcim, DMW, ANI, PXP, ISM, Shell PH, SOC, and LSC. So let's start it with PHA, the first top 5 gainer, the first in our top gainers list. PHA closed on Tuesday at 1.09. Support maintains its position at 0.86. Resistance is at it's between 1.18 to 1.26. This green candlestick came with a strong volume above the 10-day volume average, and MACD has already shown us the formation of a bullish convergence with a signal line. Historical volatility, however, is still at 145%. That means PHA having an extremely high risk level. Well, that was contributed by the sudden ascent in price last in the third week of January this year. So that's self-explanatory. Whenever you see a fluctuation, a sudden, an erratic fluctuation in the price movement of a stock, then expect the historical volatility to shoot up as well. Now, for the net foreign investor sentiment for 2019 year to date, it's a net foreign selling. It's a bearish sentiment coming from the foreign investors. Nonetheless, it's not really that significant. Their contribution is almost negligible when you compare their transactions with the blue chip companies, of course. Now, my overall sentiment on PHA is neutral to bullish. I have this reservation because based on the historical movement of PHA, there's a possibility for the price for this stock to just trade the range between 0.86 to 1.26. So if you have PHA, you may want to consider not trimming, but to lock in some gains near once the price enters the 1.18 to 1.26 range. Now, when the price enters that range, you check the price and volume distribution. If the most voluminous and most traded range is registered near the intraday high, then you may want to either hold your position or you add more shares. Because when the most voluminous and most traded range is registered closer to the intraday high than the intraday low, and the candlestick happens to be a green one, then there's a strong probability for the ascent in price to continue when those conditions are present. Of course, it will be better. It would be better if the volume is registered either equal, if not more than the 10 or higher than the 10-day volume average. Okay? So now if you don't have a position yet on PHA and you are thinking if you should enter a new position near 1.09, my recommendation is that you ask yourself, is the potential reward, are you happy with the potential reward than the potential risk? Or are you happy with the potential reward that you are seeing right now? Let's say your potential risk is at 0.86 and your potential reward is at 1.26. Knowing that the prevailing price is at 1.09, where do you think is the price closer? Is it closer to the intraday to the resistance or the support level? Of course, I think it's now closer. It's now closer to the resistance than the support level. Meaning to say you have a thicker potential risk than the potential reward. Given that scenario, are you happy with that? Is your risk tolerance level satisfied with that kind of reward to risk ratio? If your answer is a yes, then don't buy just yet. Make sure that you position near or inside the range that got the biggest volume and the highest number of trades. That's for PHA. Now let's take a look at green. Green closed on Tuesday at 2.57. Support is still at 2.34. We can adjust. We can do a downward adjustment at 2.25. Resistance is at 2.90. I think it's at the midpoint. It's at the middle. It's at the middle. The average of the intraday high and no, not the intraday high. The average between the average of the sum of the resistance and support level. I think that's where green is at the moment. That's just an estimate. Now, this green candlestick came with a strong, relatively strong volume still because it's above the 10-day volume average. Foreign investors are not that participative on green. They only registered 374,000 pesos worth of net foreign buying yesterday. MACD remains bullish. Take a look at this one. Notice that the green candlestick is already moving above the 10 SMA and MACD is already above the 10 SMA. What do you think of that combination? Of course, that's a buy signal for green. And this buy signal already came out last Monday. That was the time when MACD crossed above the signal line, a golden cross, and the price moved up above the 10-day simple moving average. Okay, and my recommendation is that you consider locking in some profits as soon as the price hits or draws closer to 2.90. Okay, 2.90. And if you don't have green yet, and you would like to know if it's logical to enter a new position near 2.57, my advice stays the same. And what is that? Check the range that got the biggest volume and the highest number of trades first. If it's registered closer to the intraday high than the intraday low, then consider doing a test buy. Buy in tranches only. Okay? Buy in tranches only. So my overall sentiment is bullish on green. Moving on to Holcim. Holcim closed on Tuesday at 10.90. Support is at 10.10. Resistance is at 10. It's no longer the resistance. It was 10.84. It managed to break out above 10.84 with a strong volume that's slightly above the 10-day volume average. Meanwhile, foreign investors have been vomiting or selling shares of Holcim for the past let's count this. They have registered net consistent net foreign selling for the past 13 trading days. Okay, 13 trading days, not calendar days. 13 trading days. Consistent outpour of foreign funds on Holcim. Now, I'm sure you are particularly interested to know the psychological resistance for Holcim, and that's what I'm going to show you now. I have pre-plotted the Fibonacci extension, and I had to zoom in the chart so I can drag it to the bottom. So the psychological resistance is now at 12.82. 12.82. You can make that 12.8 if you would like to. Okay. Now, is that a guarantee that Holcim will touch 12.8? No, this is only a probability. If you hold on, I'm going to mention my recommendation later, a few minutes from now. Now, let's talk about the MACD of Holcim first. MACD maintains its position above the signal line. And this is a buying signal because MACD crossed above the signal line when the price, that was last March 25, and that the price maintained its position above the 10-day simple moving average back then. Okay, now historical volatility is at 48%. That's a low risk level for Holcim. I'd like to emphasize as well that RSI is already close, about 4 to 5 points away from touching the 4 to 5 points away from the classical overbought signal or overbought level. So there's now a possibility for profit taking to happen near between 10.9 to 11 pesos per share. Okay, so don't keep your hopes too high. Don't keep your hopes up, too high. The psychological resistance that I've mentioned, 12.80, it is only a probability, not a promise. Okay, so if I were you, I would consider selling some shares near 11 pesos. per share, near 11 pesos. Okay, take note of that. Now, meanwhile, the alignment of the moving averages is already in a perfect bullish position for as long as the price maintains its position above the 10-day simple moving average, of course. And my overall sentiment is bullish on Holcim with a recommendation to lock in some profits near 11 pesos per share. Okay, then if the most traded and most voluminous range is still parked closer to the intraday high than the intraday low when the price hits 11 pesos per share, then there's a probability for Holcim then to test a higher high, maybe between 11 to 11.30 to 11.50. We don't know exactly, okay, but that's just an estimate. Now, when that happens, it's either you hold your position or you top up on your shares, provided those three conditions that I always mention are present. Okay, what are those three conditions again? Volume should be equal, if not higher than the 10-day volume average. Number one. Number two, the volume, or yeah, the most traded range and the most voluminous range should be closer to the intraday high than the intraday low. Okay, those two conditions, and you can also the candlestick should be green as well. So those are the three conditions. If they are present, then you can either hold your position or top up on your shares. And if you don't have a position yet and those three conditions are present, then you can do a test buy. Make sure that you activate or execute your trailing stop loss should Holcim goes reverses its direction towards the southward direction despite the presence of those three conditions. Okay, I just want to remind you that I'm mentioning these conditions, this is a criteria, but sometimes even though they are very present, it doesn't mean the market will always go upward. Sometimes it contradicts our bullish sentiment, and it's not the job of the market to follow our preferred sentiment, for the stock. We have to adjust. We have to act accordingly based on what we see on the chart and not on what we prefer to see. Okay? We have to quickly adapt to the market. So that's it for Holcim. Now let's talk about DMW. I talked about DMW yesterday as well. So DMW's last price was at 12.38 as of closing on Tuesday. Support is now at 11.80. Now let me zoom in the chart so that it will become draggable, if that's a word. Resistance, psychological resistance to be specific, is positioned near 13.64. The last three candlesticks came with towering volumes on a daily basis. They are all above the 10-day volume average. MACD is liking it. So those towering volume and the continuous ascent in price is gasoline for MACD. So it continues to move higher than the signal line. Meanwhile, take note that RSI is about to hit. It's about 6 points away from hitting the classical overbought territory. So even though I've cited 13.64 as a psychological resistance, don't keep your hopes up that much. Consider locking in some profits near 12.5 or to 13 pesos, 12.5 to 13 pesos per share. Or even at 12.5, consider locking in some profits. Okay? Now, my overall sentiment, or before that, let me make some comments about the historical volatility of DMW. Volatility is at 42%, and that means a low risk level for DMW. Okay, but the risk is relatively high at 12.5 because we're now just talking about a psychological resistance and no longer a historical one. Okay, my overall sentiment remains bullish on DMW. My recommendation is, again, consider locking in some profits near 12.5. The preposition used is near, not at. Near 12.5, and 12.38 could be near, relatively near 12.5 for you. So it's up to you now. If you don't have a position yet and you are thinking if will DMW really hit 13.64, I think instead of asking if it will really hit 13.64, my recommendation is that you just check the most voluminous and most traded range. If it's closer to the intraday high than the intraday low, then you can consider doing a test buy. Okay, analyze things for any stock on a day-to-day basis if you are into short-term trading. Okay, because it's quite tough to uh, to seek or to derive semi-guaranteed probability by by just uh, looking at these numbers. Sometimes we have to reassess or reevaluate the situation on a daily basis uh, for us to really get a good feel based on data, if there's really a high probability for the stock to inch higher than where it is. Okay, if you need assistance when it comes to doing a price volume distribution analysis, you can always post that in our private clients forum. Okay, private clients forum. Take advantage of your access to this forum. This is the only place where I discuss in detail. Not on Facebook, not on any platform, but here in our forum. That's it for DMW. Now moving on to ANI or ANI. ANI closed on Tuesday at 15.46. It broke out above the resistance at 15.13. That makes 15.13 as its newest support. Resistance is now pegged at 15.96. You can call that 16 pesos if you would like to round it up. This green candlestick came with a strong volume. It's above more than 100% above its 10-day volume average. And seeing that the body of the candlestick is actually positioned towards the upper half of of uh, upper half of the entire candlestick. This for me means that it was the bullish sentiment yesterday was really stronger than the bearish one. Not because, although that sounds quite obvious because we are seeing a green candlestick right now. What I'm trying to say is, if the body of the candlestick is positioned towards the end point, upper end point of the entire candlestick, including the shadow, then it's a signal that the bulls dominated the bears. Okay, so that's it. That's how I interpret this kind of a candlestick for in ANI. Foreign investors bought about 6 million pesos worth of shares on ANI yesterday. MACD continues to be bullish. Historical volatility is at 30%. That's a low risk level for ANI. Okay, now my overall sentiment for ANI maintains it's bullish. My recommendation is that it's either you hold your position or you top up, provided those three conditions are present. And what are they again? Should be a green candlestick. Volume should be equal, if not higher than the 10-day volume average, and the range. The most voluminous and most traded range should be closer to the intraday high than the intraday low. If those three conditions are present, you can top up or do a test buy. Make sure you are on top of your trailing stop loss. Do not forget that. Memorize that. Memorize TSL, trailing stop loss. Okay? Now, let's talk about the top 5 losers as of Tuesday, beginning with PXP. PXP closed on Tuesday at 9.38. It failed to rise above the resistance at 9.84 once again. And the red candlestick came with a red volume bar that's over 100% above its 10-day volume average. That's a bearish sign again. MACD continues its downward movement. Historical volatility maintains historical volatility is now at 118%. That's an extremely high risk level for PXP. RSI is already moving beyond the classical oversold territory. Now, there's a possibility for a PXP to bounce away from its current level back to above 9.84 or above 9.5. But still, I think everyone's still in an eavesdropping mode for PXP. Everyone is waiting who's going who will buy at a price higher than 9.38 with a significant amount. So everyone is on a wait and see mode. Everyone's eavesdropping with each other right now. So I also don't want to, you know, to make you expect that PXP will indeed bounce away from here, since it's already RSI is already beyond the classical overbought territory. By my logical recommendation for you is to continue monitoring the price volume distribution for PXP. The moment you see a green candlestick, and the moment you see that the most traded and most voluminous range is closer to the intraday high than the intraday low, then you may want to do a test buy. Okay? Even though volume is yet to cross above the 10-day volume average. That's what I call preemption technique. Okay? Sometimes you have to strictly check if the X number of conditions are present, but sometimes even though one or two criteria are absent, depending on the situation, on how you assess things out, sometimes you can do a test buy right away. Okay, so it actually depends on experience will come into play. Experience in trading, but as a beginner, my recommendation is that you stick with the presence of the recommended number of criteria while you are a relatively newbie when it comes to short-term trading. But as you gain experience, maybe after 3 years or 5 years, then that's when I advise that you do the preemption techniques that I've been citing in these videos. Okay, so that's my recommendation and sentiment for PXP. Now let's move on to ISM. ISM closed on Tuesday at 4.52, resistance is at 5.21, support is at 3.61. It's now at the brink of crossing below the 200-day SMA. When that happens, ISM will be in a bearish territory both in the short-term and long-term scales. MACD, meanwhile, continues its bearish divergence from the signal line. Historical volatility is at 61%. 61%. That's a moderate risk level for ISM. RSI is about to touch the classical oversold territory as well. Is there a possibility for the price to rebound near once the price touches the 200-day SMA? Perhaps there is somewhere near 4.24. So I've just plotted this line, 4.24. It's the midterm support level, a precursor to 3.61. So watch out for that price level, guys, 4.24. Okay, the red candlestick came with a relatively strong volume that's also above the 10-day volume average. My overall sentiment on ISM is bearish. My recommendation is that you reevaluate as soon as the price hits 4.24. If it's still a red candlestick and the most traded and most voluminous range is closer to the intraday low than the intraday high, then it's a signal that the price might continue its descent all the way to 3.61. It might retest the deeper support level beyond 4.24, which is at 3.61. Okay, that's it for ISM. Now let's talk about Shell PH. Shell PH closed on Tuesday at 45 pesos per share. Okay, 45 pesos per share. It closed on Monday at 47.9. What do you think caused this gap? Of course, that's, if you remember, Shell PH, it was every April 2, 2019 is the ex-dividend date for the 3 pesos per share cash dividend. So this is normal dilution. Dilution occurred on April 2. It's the market's way of rebalancing the market capitalization after giving out or after the on the ex-dividend date itself. So dilution. Okay? I already mentioned this terminology in my previous video. So just go to Investopedia, go to YouTube, go to Google, type in dilution, and you spell that as D-I-L-U-T-I-O-N, dilution, not delusion. Okay, so there you go. Now the dilution on Tuesday came with a green volume slightly below the 10-day volume average. Foreign investors sold about 9.5 million pesos of shares. Of course, when dilution occurs, expect MACD to point to the southward direction rather, including RSI. And historical volatility will shoot up. That's why we have historical volatility of 39% now, and that's still a low risk level for Shell PH. My recommendation is that it's quite tough after the dilution. It's really quite tough to make a data-driven guesstimate if the price will recover or not. So my recommendation for now is that be on the neutral side of the game for now, maybe at least within the first 15 minutes or 30 minutes of trading, because you're going to spend those initial minutes after the opening bell to reevaluate or reassess the situation. Look for two things: the color of the candlestick and the most traded, the most voluminous range. Let me tell you about this. Within the first 15 to 30 minutes, if you see a green candlestick and if you see that the most voluminous and most traded range is closer to the intraday high than the intraday low, you do a test buy. You do a test buy. Okay? That's what you're going to do. But if those two conditions, if either of those two conditions is absent, is not present, is not available, then stay being on a wait and see mode. That's my recommendation and sentiment for Shell PH. Second to the last stock in the list is SOC. SOC closed on Tuesday at 1.05. It's now leveled to its support level at 1.05. Resistance is at 1.41. Okay. This red candlestick came with a volume that's above, almost equal to its 10-day volume average. MACD maintains its range above the signal line. Historical volatility is at 332%, an extremely high risk stock, SOC. My recommendation, my overall sentiment is bearish on SOC. My recommendation is that you wait for the price to drop below 1.05 before you check the availability of those three conditions before you do a test buy. Okay? Now, moving on to LSC. LSC closed on Tuesday at 0.95. Support is at 0.88. Resistance is at 1.07. Volume isn't that high. Okay? It isn't that high. So there's a probability for LSC to just continue moving sideways. Okay? MACD maintains its position above the signal line. And historical volatility is at 90%. That's a high risk level for LSC already. My overall sentiment on LSC is neutral, meaning to say it might just move sideways between 0.88 to 1.07. My recommendation is that you pick other stocks. I'm not happy with the volume or volatility or liquidity of LSC. So there you go for my overall assessment and analysis for LSC. So you've heard my technical analysis, overall sentiment, and analysis for recommendations for these 10 stocks. Again, my name is JC De Guzman. Have a great day.